Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this final CA RTP for November 2023. Now, the RTP is really simple this time, but before we begin seeing the questions, one important note which you should always keep in mind. Whenever it is a case study based MCQ, you must first read the questions and try to understand what they need from you, and then read the main part. What would that do is, when you have read the questions, your mind will automatically, while reading the case study, start answering those questions and you will start thinking on those lines. This is something really important, and what I have done is I have solved it myself, and near the RTP all the thinking and at that point of time what should be the approach is all written, so that I can quickly complete this RTP video, because I understand at present time is the most important aspect for you guys. So let's start with RTP November 23. So there's a question related to telecommunication industry where we have Infotel Limited. Let's first see what is the requirement of the question. So first thing, calculate the GST payable in cash for the month of January by head office of Infotel in Haryana, assuming no ITC is utilized. That means what they basically want from us is output tax. Then calculate the input tax credit for the month of January. We will consider all the ITCs in this. In terms of GST law, please select the correct statement for a transaction between Infotel, Cloud Zone and subscribing customer. We'll have a look at it. The jurisdictional tax authorities are contemplating to bring Amaze Inc. under the tax net for a transaction related to cloud storage. Something related to OIDR, we'll have to be careful. Please choose the most correct statement. Then for direct to home services, Infotel is exploring the possibility of providing equipment like dish antenna and cable, which is liable to 28% to the customers at an additional charge of 2000. Currently, the company collects 1000 from new customers as installation and 1 month charges for services. In case the dish antenna and cables are provided, the combined charge will be 3000. So dish antenna, installation, 1 month charges. The basic service, the principal supply will be DTH service, that is direct to home cable service. This DTH service will remain the principal supply, all others will become ancillary to that. This is the position which has been adopted by ICAI in this particular, and same thing will be applied by you in your examination. Fine. Now let's see what all is given. Infotel Limited, hereinafter referred as Infotel, is a telecommunication company operating in India. The company has obtained registration in all states in India and has its head office in Haryana. So we are asked only about Haryana. The invoice for telecommunication services in India is issued to customers by head office located in Haryana for all the services. During the month of January, following transactions were undertaken. So we'll have to focus on output, ITC, RCM for any single transaction. Receipt from postpaid mobile customers, 25 lakh. 5 lakh is from customers located in Haryana. Remaining amount is customers outside Haryana. But be careful, they have asked us only net amount. So there is no need of calculating ICS separately in this, because while you were reading the questions, they have only asked us GST payable. They have not given us CSI breakup. So we are not required to worry about that. We can go by totals. So this postpaid collection will become output. 25 lakh will apply 18%, 4.5 lakh. That's given in the question. The rates are given here. So having a look at rates will help us calculate everything at that particular moment. Then, apart from this, Infotel collected an amount of 20 lakhs as subscription income, identifiable separately on postpaid bill from the customer. This amount is not included in the collection point of 1 above. So this is separate. So 20 lakh is collected as subscription income. The same was collected for payment to CloudZone. Oh, that means they are not providing the service. They are collecting it on behalf of CloudZone from the customers. An online content provider, that is a OTT platform. So CloudZone is a OTT platform. They are charging the customers. Infotel is basically collecting that amount on behalf of the customers and giving it to the service provider. So the service provider here is CloudZone, customer is the recipient. I am just acting as an intermediary, and on behalf of the customers I am collecting it and giving it to the company. So I basically bill to the customers. The question is, when I am billing to customers, should I charge GST on this? The answer is no, I will not be charging GST on this because I am acting as a pure agent of those customers. Full amount was remitted to CloudZone by Infotel on behalf of postpaid customers. So see, Infotel is acting on behalf of the customers. CloudZone issues invoices to the customers in its own name. As per agreement, Infotel is not involved in any sort of facilitation or arrangement of the supply. It's CloudZone who is going to give the service. They are responsible for it. The customers on their own availed the facility to pay for the services provided by CloudZone by way of payment through Infotel. Subscription income is charged from the customers on actual basis and no fee is charged by Infotel from the customers. We don't charge anything from the customers. Infotel receives an amount equivalent to 10% of total amount collected as collection charges. Will this be liable to GST? The answer is yes. So 20 lakh into 10%, that is 2 lakh into 18%. This will become my output. Is it, sir? Yes, this will become my output. Then direct receipt from prepaid mobile customers, 50 lakh. Entire amount is for outside Haryana, doesn't matter. 50 lakh will become part of my output. So we have taken it in output. Mobile telecommunication service revenue received from PayQuick Limited, a reseller selling agent of Infotel, 30 lakh. The location of PayQuick is in Maharashtra. Commission paid to PayQuick was 10%. So there are two things. One, the revenue which PayQuick has collected on our behalf, that will become our output. So we have considered it as output, 30 lakh. And they will charge us commission. This commission we have considered as input tax credit for us because PayQuick will be charging to us and we will be eligible for ITC. Then Infotel collected an amount of 5 lakh from the customers located in Haryana against DTH services in Haryana. This includes one-time installation charges of 50,000. So entire 5 lakh will become part of output. This is a simple transaction. Infotel purchased certain equipments for installation of its tower in Rajasthan. The goods were delivered and installed by the supplier at Infotel's site in Rajasthan and invoice was issued to Haryana office. So will we get ITC on telecommunication towers? The answer is no ITC because it is part of block credit. Do you get ITC for block credit? No. Plant and machinery specifically excludes telecommunication towers. Then let's see the next one. Infotel collaborated with Amaze Inc., a company in US, for receiving technology support in relation to provision of cloud storage services for customers. The amount paid by Infotel to Amaze is 5 crores. On this 5 crores, will we have to pay RCM? The answer is yes. B2B transaction, OIDR service. The recipient in India is liable to pay tax under RCM. Will he also get ITC of that? The answer is yes. So we will consider it as RCM 5 crore into 18%, which is 90 lakh, and same amount will appear as ITC. So it will form part of two calculations. One, GST payable calculation, because this is also a payable amount, and ITC calculation. Further, cloud storage services were provided by Infotel to unrelated premium customers free of cost. The open market value is 75 lakh. There will be no GST because this is not a transaction covered by Schedule 1. See, without consideration, only 4 things can be liable. Permanent transfer of a business asset where ITC was taken. This is not this transaction. We are not permanently transferring anything. Related person. No, it clearly says unrelated premium customers. Third, principal and agent. No. Import of service. No. I am providing it to my customers. There will be no GST on this. As per the agreement with Amaze Inc., in case of any failure in provision of cloud storage services to the customer by Infotel, Amaze Inc. shall provide the backup servers to Infotel customers for data storage. Customer is not aware of the fact that data is being stored on Amaze Inc. server, and in case of failure from Infotel end, Amaze Inc. charged 50 lakh from Infotel for the month of January. Again, Amaze Inc. is charging Infotel B2B transaction. Again, it would be a case of RCM. We'll consider it as RCM. Also, we will get ITC on this. All the amounts given are exclusive of tax. Now, let's see how much is the GST payable in cash. We'll have to add all these outputs. So, this is 4.5 lakh plus 36,000, 4 lakh 86,000 plus 9, 13 lakh 86,000, 13 lakh 86,000 plus 5.4, which will come to 1926, 1926 plus 90,000, 20 lakh 16,000 plus 99 lakh, and it comes to 1 crore 19 lakh 16,000, and the answer will be 1 crore 19 lakh 16,000. And let's see the ITC. ITC is all green ones. 9 plus 90, 99 lakh, 99 lakh plus 54,000. Oh, that's it. So the answer for this will be 99 lakh 54,000. Then let's see. In terms of GST law, please select the correct customer statement between Infotel, Cloud Zone and subscribing customer. Infotel is a pure agent of the subscribing customer. Obviously, they are acting as a agent for customer, collecting it from them and then paying it to the service provider. Okay. Great. The jurisdictional tax authorities are contemplating to bring Amaze Inc. under the tax net for the transaction related to cloud storage. Will Amaze Inc. be required to register? The answer is no. It's a B2B transaction. As it's a B2B transaction, Amaze Inc. is not liable to obtain registration for the said transaction. If it was a B2C transaction being OIDR service, then the supplier outside India will be required to register under GST. Okay, for D2H, direct to home service, where you are charging 1000 rupees for installation and service charges for 1 month and 2000 rupees for dish, antenna and cables. Principal supply is D2H services. Entire 3000 will be regarded as a composite supply, and the rate of GST which will apply will be 18%. As it is not a mixed supply, you will not charge 28. So the answer will be GST on 3000 will be charged at 18%. Let's have a look at the answers. D, A, C, D, C. D, we got 1, C, D, A, C, D, and finally on entire 3000, 18% will be applicable. Okay. Now these are easy ones, 1 mark or 2 mark questions. Let's see these other MCQs. Guruji and Associates is engaged in retail business of selling wedding outfits in the state of West Bengal. It has affected supplies to its customers in Uttar Pradesh and Haryana. Total turnover is 15 lakh. Owing to low profit margin, it has decided to shut down the business in the next financial year. Proper officer has collected evidence of interstate supply affected by Guruji and Associates during the current year. Now the proper officer wants to make assessment as it was liable to obtain registered but did not get itself registered. You are required to assess the proper officer by determining the assessment which can be done. First of all, is he liable to register? Yes, because interstate supply of goods liable to register. How will you do the assessment? Assessment will be done under assessment for unregistered persons. This is the one. There is nothing called as special assessment. This is not a case of provisional assessment. This is not a case of self-assessment. Okay, great. Let's see. Lala Pedawala owns a famous sweet shop located and registered under GST in Uttar Pradesh. He has received an order of 100 kg of sweets on 2nd May. So they are asking us time of supply. When you receive the order, is it relevant? No. Is it goods or service? It is goods. From Parinde Travels Private Limited, located in the same locality of Vrindavan and registered under GST for total 50,000. Complete order of sweets was delivered on 5th May. Removal has happened without invoice as accountant was on leave. Invoice was raised on 6th May. What will be the time of supply? Due date to issue invoice, that is date of removal 5th May will be the answer. Okay. See this question. Countervailing duty under section 9. We are talking about CVD on subsidized goods. Shall not be levied unless it is determined that subsidy provided by exporting country on manufacture of an article relates to export performance. See, if it is related to export performance, no CVD. Relates to use of domestic goods over exported goods, no CVD, because these are common things. Every country gives export performance benefits. Just because an export performance benefit is given doesn't mean it is a subsidy. Just because we encourage use of domestic goods over imported goods doesn't mean it is a subsidy to levy CVD on subsidized goods. Is conferred to all persons engaged in manufacture of such goods. This, say suppose it is given to everyone, then CVD will be applicable. So what are the cases where CVD will not be applicable? 1 and 2. Careful, this not plays a very important role. It will not be levied unless it is determined that the subsidy relates to something which is given to all persons who are manufacturing it. Double negative language, be very careful. For these two it will not be levied, only for this it will be levied. So be very careful on this. Okay. Swadeshi enterprises exported goods having FOB value of 20 lakh. The all industry drawback on exports of these goods is 5%. Market price of the goods in India is 80,000. Calculate duty drawback. Now 20 lakh into 5%. 20 lakh into 5% comes to 1 lakh. Now 1 lakh is much higher than 80,000. If duty drawback exceeds the amount, then in that case you are not entitled for any duty drawback. Okay. Now let's see which of the following statements is correct for destroyed goods under section 23. It is applicable in case of total loss of goods even if the same can be recovered. If it can be recovered, then there is no question of claiming the benefit. The provision of this section are also applicable if goods are lost due to pilferage at any time before clearance for home consumption, not at any time before clearance for home consumption. This provision is also applicable even if the goods are destroyed at the warehouse. Correct, we get the benefit at the warehouse. Importer need not prove loss. This is a wrong statement. Obviously, he has to prove the loss to government. Okay, so these were the MCQs. Now let's go ahead and see the question which contains all the details of outward supply and inward supply, where this is the question which is a 14-mark question which would contain all the details, and you will be required to calculate GST payable. Okay, such questions, now first read what they want. From the given information, calculate minimum net liability C and S and I. You have to calculate it separately for the month of January and give the reasons for the treatment. Writing notes is mandatory. Without writing notes, it would not work. Now let's see the 8th question. Countervailing duty under section 9 shall not be levied unless it is determined that the subsidy provided by the exporting country on manufacture of article. Double negative, shall not be levied unless it is related to export performance. That means if it is related to export performance, you will levy CVD on subsidized goods. Relates to use of domestic goods over imported goods in an export article. Again, if it is some subsidy which is related to use of domestic goods, then in that case it will be levied. So here CVD on subsidized goods will be levied. Here also CVD on subsidized goods will be levied for such subsidy. But if it is given to all persons engaged in manufacture of such articles, then in that case it will not be levied. Say suppose government is giving a subsidy of ₹10 for manufacture of this rubber related to this pen. If this 10 rupees subsidy is being given to everyone, irrespective of whether he is an exporter or a domestic supplier, then in that case CVD on subsidized goods cannot be levied, because then it is not related to export performance. The receiving country does not get affected because of that, because such subsidy is given to everyone irrespective of whether it is an exporter or a domestic supplier. So the right answer will be 1 and 2, where CVD will be levied. Then let's see the next one. Swadeshi enterprises exported goods having FOB value of 20 lakh. All industry duty drawback on exports of these goods is 5%. Market price of the goods is 80,000. Calculate duty drawback receivable. So 20 lakh into 5% comes to 1 lakh. If drawback is more than the market price, will you get drawback? The answer is no, you will not be entitled to any drawback since market price is lower than the duty drawback. Okay, which of the following statements are correct for destroyed goods under section 23? So we'll have to find the correct statement. It is applicable for total loss even if the same is recovered. No, if it is recovered, then there is no question of claiming a benefit. The provisions of this section is also applicable if goods are lost due to pilferage at any time before home consumption. No, only after unloading but before clearance for home consumption. So this statement is also wrong. Provisions of this section is also applicable if the goods are destroyed in warehouse. Correct, you get the benefit in the warehouse. Importer need not prove loss to the proper officer. This is a wrong statement. Obviously you'll have to prove the loss to the proper officer. So this was about the MCQs. Now let's move on to one question which will contain all output, input, all the informations. Let's see here. Always I'll suggest to see the last part. See the last part. From the information given above, you are required to calculate minimum GST payable, CSI. That means you will have to calculate ICS separately for the month of January and give the reasons. Writing notes is mandatory. You don't have a choice. You will have to write notes for the treatment which you have adopted for every adjustment. Okay. Rates 18%. Knowing this will help us solving it at that point of time. Now let's see. Outward supply. So Sudarshan Limited, a registered supplier under GST for Kerala, is engaged in providing a bouquet of goods and services other than renting of cars. It provides the following information for the month of January. Distributed 1000 free gifts, electronic items worth 5000 each, purchased from unregistered local vendors. So no ITC. To its customers within Kerala to promote sales. Free gifts given. Will GST apply? No, GST will not apply. Reason? You are not generating any kind of output tax because it's not a Schedule 1 transaction. Then supplies a consignment of goods in Indian territorial waters to Dhruvtara Enterprises. The said territorial waters is located at 11 nautical miles from Kerala and 12 nautical miles from Tamil Nadu. So place of supply will be Kerala. You will end up charging C+S because Sudarshan is also from Kerala. Advance received for the month for future intrastate supply. 2.1 lakh is for goods. 2.1 lakh, no GST implication as of now. In January, 4.9 lakh C+S will be applicable. Pure labor services of construction of a single commercial unit. See, not a residential unit. Residential unit except as part of a complex enjoys an exemption. But this is for a commercial unit not forming part of a residential complex. Commercial unit, this will be taxable. You will levy IGST because you are from Kerala. The supply is in Mumbai. Monthly rent paid to Kerala state government for the office. You are paying to Kerala state government. RCM will apply. Government to registered person renting RCM. So you will get ITC plus you will discharge tax payable under RCM at the end. Purchased raw material from Saksham Steel registered in Andhra Pradesh. This will be IGST transaction. Purchased a new truck, 12 lakh. I have written no ITC, but we will see there is some information which is there below because of which we have not taken ITC. Okay. During the course of arranging and filing documents, the accountant of Sudarshan Limited noticed an invoice of 96,000 dated 2nd December. See, we are doing everything for January, but now we found a 2nd December invoice of last year which was omitted to be recorded in the books of accounts and no payment was made for the same. This invoice was issued by Mr. Rishi, from whom Sudarshan Limited had taken cars on rental basis. People, renting of a car, RCM. See, renting of a car provided by other than body corporate to a body corporate is covered by RCM. But let's see whether this will come in RCM for the month of January. Interesting point kept by institute. 2nd December. Now from 2nd December, payment is not yet made. What is the time of supply for RCM services? Time of supply for RCM services, sir, date of payment or 61st day from invoice. Now 61st day from invoice, when we calculate the 61st day from invoice, it comes to 1st Feb. So will there be any treatment in January? The answer is no, there will not be any treatment in January. So this transaction will not appear in January. Otherwise, normally whenever it's an RCM case, we assume that payment is made, but here it is clearly said that payment was not made till the end of January. So time of supply will not come till the end of January, and the time of supply will be 1st Feb. So for our January calculations, this will not be considered. Otherwise, we would have ended paying RCM, plus we would have also shown it as block credit, because renting of cars you don't get ITC. So this would have been two treatments which have been avoided. One, RCM, second, block credit. But here there is no question of RCM in January because the time of supply is 1st Feb. Very important transaction in this entire RTP. Okay. Availed services related to arbitral tribunal from Kerala 7 lakh to settle a matter. This will be RCM. Will we get ITC, sir? Yes. Truck, you have claimed depreciation. Congratulations. That's why no ITC. Saksham Steel is mandatorily required to issue e-invoice. However, it did not issue e-invoice, but the invoice is coming in to be. Oh, this also you will not get ITC. Why? Because the other person has not generated e-invoice. If a person who is required to generate a e-invoice, if he does not generate e-invoice, then that document is not a legitimate document to take ITC. As you don't have a legitimate document to take ITC, one of the conditions of section 16 is not satisfied, and hence you will not be eligible for ITC. That's it. All the amounts are exclusive. So here also we don't get ITC, here also we don't get ITC. Now let's see the calculation. So free gift, nothing. Goods, 6 lakh, we will charge output. Advance only related to services, we will charge output. Commercial unit, we will charge output. We get the total of output. Monthly rent, we will get ITC. Car rental, no question of ITC. Advocate, arbitral tribunal services, yes, it's not advocate, it's arbitral tribunal. Arbitral tribunal, we will get ITC because it is related to business dispute. Saksham Steel, no ITC, you'll have to accompany it with a note. Truck, again no ITC because you have claimed depreciation. Then you do the tax calculation. First you adjust ITC of C because you don't have any ITC of IGST, so you use C, then you use S, and then you get tax payable under RCM. Sir, how did you get this tax payable under RCM? Both the things are RCM. Which one? Monthly rent and arbitral tribunal. Both these are RCM cases. So this 1,17,000 is RCM in both the places, and we get the total tax payable including RCM liability. Was a easy question, just be careful of that rental point of car. Okay, now coming to easier ones. From here we have 5 mark questions. Gautam Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sells products Alpha, which is exempt from GST, issued under relevant GST legislation. So it's exempt under a notification. Company sells product Alpha only in Tamil Nadu and it is not registered. Fine, you are exclusively supplying exempt supply, no need to register. Turnover of the company in previous year was 55 lakh, doesn't matter. The company expects sales to grow by 15%. Owing to growing demand of the product, company decided to increase production capacity and purchase additional machine on 1st July. The machine was for 30 lakh exclusive of 18%. 1st November, the exemption available to Alpha was withdrawn and GST of 12% was imposed. Turnover of the company for half year till 30th September was 60 lakh. Board of directors want to know whether they have to register under GST. Obviously, yes, they have to register under GST because your aggregate turnover now exceeds that 40 lakh limit which will be available to you, and till now it was an exempt supply. Now as it has become a taxable supply, you will have to register. So yes, you'll have to register. And whenever you take a new registration, stock of capital goods, do you get ITC? No ITC on stock of capital goods, but stock of inputs will be eligible. Nothing related to inputs is given, so we'll have to just focus on stock of capital goods. In case of the above question, Gautam Private Limited is already registered with respect to certain taxable supplies being made by it along with manufacture of exempt product Alpha. Other facts remaining same, can ITC be taken on additional machine exclusively used for Alpha? If yes, then when and how much can be availed? Okay, if it was a registered person and then exempt supply becomes taxable, then you can take on inputs as well as capital goods. Capital goods, you get tax paid minus 5% per quarter or part of the quarter. Now July, you have purchased it in July and you are getting to know this taxability on 1st November. So July, August, September, October, November, December, 2 quarters. So total tax paid is 5.4 lakh, 30 lakh into 18%. So 30 lakh into 18%, which comes to 5.4 lakh. 5.4 lakh minus 5%, 2 quarters. Once you do this calculation, that much of ITC can be taken, which is 4,86,000. So if you are unregistered to registered, then capital goods you will not get even a single rupee of ITC. But if you were registered and exempt product becomes taxable, then you'll get on inputs, you'll also get on capital goods. Capital goods you'll get tax paid minus 5% per quarter or part of the quarter. Okay, let's see the next one. Advance ruling once issued cannot be held to be void ab initio. This is a wrong statement. Discuss the correctness of the statement. Now, if the advance ruling was taken based on fraud, misrepresentation of facts, suppression of facts, then in that case it will be held ab initio void, and whatever was there till that period, that will be considered as valid. But otherwise, at that point of time, it would be considered as if the advance ruling was not given. Plus, for section 73-74, that time period will completely be ignored and a notice can be issued by the proper officer. Okay. Pathan Vohra, Pune, Maharashtra, enters into an agreement to sell goods to Sukumar Enterprises of Uttar Pradesh. While the goods are being packed in Pune, godown of Pathan, Sukumar has received an order from Sindhu Private Limited of Karnataka for the said goods. Sukumar Enterprises agreed to supply the said goods to Sindhu and asked Pathan to deliver directly to Sindhu. Now what will be the place of supply? This is a classic case of bill to ship to transaction. Billing done to one person, shipping done to other person. Now, first transaction, that is between Pathan Vohra and Sukumar Enterprises. The place of supply will be third person. This is the third person, 10(1)(b). UP will be the place of supply because Pathan will be billing to Sukumar. Now Sukumar is sending it to Shimoga, Sindhu Private Limited. Here it's a case of 10(1)(a). The goods are getting delivered to Karnataka. So place of supply will be Karnataka. I mean, this is a simple case of section 10(1)(a) and 10(1)(b both being applied on a bill to ship to transaction. So the consumption principle is held true completely based on these provisions. Okay, let's see the next one. Explain the applicability of GST on the application fee charged for entrance or fee charged for eligibility certificate for admission or for issuance of migration certificate by education institute. It will enjoy an exemption. Any service provided by an education institute to students, staff or faculty enjoys an exemption, and CBIC has clarified that this migration certificate, eligibility certificate will enjoy a exemption. So completely based on the new circular. Okay. Then 16th one is interesting. Mounty Limited entered into high C sale transaction with Fuji Limited for certain goods. Monty Limited wishes to understand the taxability of high C sales under GST law and customs law. Wonderful. So GST law as well as customs law. Now first of all, high C sale, GST law, very simple, negative list, there is an entry, there will be no GST implication. But when it comes to customs law, if it is a high C sale, then the transaction is completed before the goods touch India. It's not a warehouse case. Be very careful, don't mix up warehousing sale with high C sale. Warehousing sale, it's a different transaction. High C sale, it's happening even before the goods have touched India. Then in that case, assessable value will change because the last sale transaction value will be considered as assessable value for customs. I'll give you an example. I imported the goods for 10 lakh. I did a high C sale for 15 lakh. In this case, assessable value will be 15 lakh because value at the time of importation is considered as per section 14 of Customs Act 1962. So for customs, custom duty will be applicable on transaction value, that is sale price, which will become the assessable value at the time of importation. Let's see, GST negative list, we know that. Customs, last price paid by the person filing bill of entry because it's the price at the time of importation. Okay, then next one is a simple theory question. Precautions to be observed while issuing summon. Summons are issued by the officers. Once summons are issued calling for information, what are the precautions which officer has to take care? No summon if appearance is not necessary. First of all, they should not call someone unnecessarily. Second, it should not be repeatedly done by the officers. Respect time of the other person. If you have called at a particular point of time, then please be available. These are the instructions issued by CBIC to the officers. Normally, it should not be beyond working hours. Okay. Then coming to customs question. Ampine Limited imported a machine from UK in April. The details are here under. FOB 9,800, obviously this will form part of value. Freight air, so you know to do a 20% on the actual FOB, that is the FOB after adjustments. On that you'll apply 20%, compare it with this 3,000. License fee, this will get added, so 9,800 plus 600. Buying commission not liable. Now date of filing bill of entry is given, arrival of aircraft is given. Remember, rate of exchange will be first bill of entry, that is 99, but rate of duty will be whichever is later, that is filing bill of entry or arrival, whichever is later. So you'll consider 10% here. Based on this you'll do the calculation. So 9,800 plus 600, this becomes your actual FOB. You apply freight, that is 20%, apply insurance, you get your assessable value. Once you get your assessable value, apply basic custom duty, social welfare surcharge. All three taken together become value for the purpose of IGST. Apply IGST, you get total custom duty including IGST. Okay. Then let's see the 19th one. We are left with only 2 questions. After visiting US for a month, Mrs. and Mr. Rajesh Jain Indian resident of 35 years and 40 years brought in India laptop computer worth 80,000. There is no tax. Laptop computer enjoys an exemption. Used personal effect again without any limit, no problem. Personal computer 65,000. Be very careful. Personal computer 65,000. Personal computer does not enjoy an exemption. Only laptop enjoys an exemption. So personal computer 65,000, you can't break it between two persons, so you'll have to allot it to one person. So 65,000, and you'll get a general free allowance of 50,000. On 15,000 you'll end up paying 38.5%, which is 5775. If it was two products of 30,000 and 35,000, one could have been to Mr. A, one could have been to Mrs. Rajesh Jain. So that could have been the status, but as it is one PC, it has to be allocated to one person, and only GFA of 50,000 can be claimed because it cannot be clubbed. Okay, final question. Briefly explain duties which are exempted in case of import of advance under advance authorization. This is related to FTP 2023. The video of that is already there on YouTube. Advance authorization, you'll get all the exemptions, but anti-dumping duty, safeguard duty, transitional safeguard duty, and CVD on subsidized goods you will not get for two kinds of deemed exports. Otherwise all duties are exempted. You will mention about basic custom duty, social welfare surcharge, IGST, compensation cess, anti-dumping duty, CVD on subsidized goods, safeguard duty, transitional safeguard duty, which is for China. But these are not available for two kinds of deemed export. One, supply of capital goods against EPCG. If you are a supplier of capital goods against EPCG license, then these duties you don't get an exemption. And supply to United Nations for projects financed by them, that is also not available. Otherwise all the duties will enjoy a exemption for all other transactions. That means if you are involved in physical exports or deemed exports other than these two, then you will enjoy BCD, social welfare surcharge, anti-dumping duty, CVD on subsidized goods, safeguard duty, transitional safeguard duty, IGST, compensation cess. Nothing is payable for physical export and deemed export other than these two. These two you will get BCD, SWS, IGST, etc. But all these protective duties is what you will not get as a relief. So be careful about that. Read FTP 2023 well, so that you are able to answer a 5-mark question which is generally asked in the exams. Wishing you all the best for your exams.